Work together 7-1. So the directions tells us Kellgren Corporation depreciates all plant assets using the straight line method. Plant asset records, a general journal, and a cash payments journal are provided. Source documents are abbreviated as Check C, Memorandum M. So we have 3 transactions that it gives us. It says for direction number 1, we're going to journalize the transactions completed during 20X1. General ledger accounts are land 1210, building 1220, office equipment 1230, and warehouse equipment 1240. So first thing that we're going to do is we're going to record those 3 transactions. Okay, so our first transaction is January 3rd. It says that we paid cash for a printer, plant asset number 321,840. No estimated salvage value, estimated useful life 3 years, serial number is given to us, and then check number 610. So first we're going to put it into our general journal. Since we're paying cash, we're going to go into our cash payments journal. So I'm going to start with my date is January 3rd. I'm paying cash, so I'm going to go ahead and put in my cash credit right away, and that was $840. And then the printer, I'm going to, that's going to be office equipment. So I'll check number 610. And so I'll debit office equipment for $840. Transaction number 2 is April 5th. It says that we bought a conveyor table, plant asset number 326, on account from Packing Systems, 1800, estimated salvage value 200, estimated useful life 5 years, and serial number is given to us, memorandum 67. Since we bought that on account, we're going to go to our general journal. So April 5th. And a conveyor table is going to be warehouse equipment. And that's going to be document M67. And we're going to debit that for $1,800 we paid. And we'll credit then accounts payable, Packing Systems for $1,800. Last transaction is October 8th. We purchased a warehouse for $300,000. The building was appraised for $240,000 and the land for $80,000. The building has a useful life of 25 years and an estimated salvage value of $25,000. Plant asset number 341 and 342, check number 920. So cash payments journal, October 8th. And I'm going to put in my cash credit right away. This was a total of $300,000. Okay. And then I'm going to go back here. I'm going to put in my first one. Notice we have 2 lines for this one because we have 2 different assets in this one. We have the building that we bought, and then we also have the land that we bought as well. So I'm going to put in 920 was my check. So first of all, it says that our building is appraised for $240,000 and our land for $80,000. So we have to figure out the amount that we're going to assign for each one because we only paid $300,000 for them. And if we add those 2 appraised values together, that's going to be more than $300,000. Okay, so we're going to figure out what we're going to put towards both. Okay, so I thought they had a spot for us to figure that out. So if you scroll down to the very bottom, they have a little spot where you can fill in this information to help us find. So here, what we're going to do is we're going to take the appraised value of the building, which was $240,000. And then we have to figure out the percentage, so we'll figure that out. I'm going to just fill in the appraised value of the land is $80,000. To figure out the total appraised value, we're going to add those 2 together. And so that would be $320,000. Remember, we paid $300,000, so we got it for a cheaper price than the appraised value. So now we need to figure out the appraised percentage, or the percentage of total appraised value. So what we're going to take is we're going to take the appraised value, 240, divided by the appraised value, 320,000. Okay, that gives us 75%. So to get the assigned cost, we're going to take 75% times how much we paid for that, which was $300,000. So that tells us that we're going to assign the building cost to be $225,000. Okay, next we're going to find a percentage for land. So we're going to take that 80,000, the appraised value, divided by the appraised total, 320,000. So that gives us 25%. So that means 25% of our value of what we paid will go to land. So we'll take 25% times what we paid, 300,000. So 75,000 will be assigned to land. So that means we'll then add up the total costs. That gives us the 300 that we paid for it. Okay, so now let's scroll back up. So we need to put this in. We already put in that we paid $300,000 in cash. We need to put in how much was land and how much was building. So the building was $225,000 and the land was $75,000. Okay, so direction number 1 is done then. Direction number 2 says we're going to complete section 1 of a plant asset record for new asset purchases. So our first one, I'm looking back at our January 3rd, we bought that printer. So that's what I'm going to record here. And that information kind of comes from that transaction. So the plant asset record number is 321. The general ledger account for the printer, let's see here, we're going to have to look back at number 1. This was office equipment, so the direction number 1 said office equipment is going to be 1230. And this, oops, office equipment. Description, it was a printer. The date that we bought it was January 3rd of 20X1. The serial number they give us in the transaction, so B06, this one. The original cost was $840. Estimated useful life was 3 years. Estimated salvage value, there is none, so we'll just put 0. And then the depreciation method is going to be straight line. Okay, so that's all we need to fill in for that one. Now our next one was from April 5th. It was the conveyor table. So that one, it says we're going to use 326. We put that in as warehouse equipment. So that's going to be, let's see here, warehouse equipment was 1240. The description was a conveyor table and it's warehouse equipment. We bought it on April 5th, 20X1. The serial number, HE, there we go. The original cost was $1,800. Estimated useful life was 5 years. Estimated salvage value was $200. That's a drop-down menu. Oops. And depreciation method is still straight line. Okay, next one for October 8th. We're actually going to fill out 2 for October 8th. We're going to have a building and a land one. So this one will fill out as our building. So this is going to be 341. And our building is going to be 1220. The description is going to be, we're going to call this our warehouse. And that is our building. We bought it on October 8th. Serial number we don't have, so we'll just put NA there. Original cost was $225. Remember, that was our assigned value. Estimated useful life is 25 years. Estimated salvage value is 25,000. And depreciation method is straight line. Okay, last one that we're going to fill out then is going to be for our land. So this one is going to be 342. 1210 is going to be our general ledger. Land is our description. Oops. And land here as well. We also bought this one on October 8th. No serial number. The original cost is $75,000. Estimated life. Remember, for land, it does not depreciate. So that's NA. Same with the salvage value. And then the straight line is going, or depreciation method is going to be straight line. Okay, we already filled that out from before. So that should be everything that we need for the work together 7-1. And then we'll fill in the rest of those plant asset record sheets later on. So check my answer. Oh, and I just did that on accident because I wasn't even paying attention. This one would not be straight line. I just got done saying that we don't depreciate this one. So this one would just be NA as well. So sorry about that. So make sure that you remember that on your own.